So good afternoon, everyone. Once again, this is the last class period before our first exam. We will finish the comprehensive problem and discuss a quick review for the first exam. So essentially, once we're done with the preparation of financial statements in the comprehensive problem, I'll show you where to go for the exam review and the supporting documentation for that. So last time I gave you the comprehensive problem. We looked at a company which provided services, H&H Tool Company. So today we will look at the adjusted trial balance, talk about financial statements preparation and closing entries, and we'll finish the material from chapters 1, 2, and 3. So let's go ahead and look at the actual document. If you remember from last time, the actual document is posted in the Chapter 3 folder. I'll go ahead and share my screen with you, and then I will go to the Chapter 3 folder just to show you where the document is. So again, Blackboard. Here is here's the Word document that I was using last time. And this here is the recording of the first part of the comprehensive problem. So today we will start with the adjusted trial balance. This is what we talked about last time. This is the last thing that we looked at. Remember, when we're preparing an adjusted trial balance, all we're trying to do is make sure that the debits and the credits that the company's accountants have done, the journal entries throughout the month, result in total debits that equal total credits. So last time, as I mentioned, we talked about where these balances are coming from. I'm going to scroll up a little bit to remind you where they're coming from. These are the balances in the T accounts. So if we look at the cash account, after all the ins and outs, at the end of the month, the cash account has an ending balance of 66. So they should all match. We looked at pretty much everything here on the first page. We talked about the adjusted balance is prepared after adjusting journal entries are prepared. The adjusting balance lists the accounts in order, just like the unadjusted trial balance. So you can see all of these are asset accounts all the way down to here. So these are assets, followed by liabilities. Here is the liabilities over here. These are liabilities, followed by stockholders' equity, common stock, and retained earnings. So this is the stockholders' equity part, followed by revenues and expense accounts. So once we are done with these transfers, all we did here was we transferred the balances from the T accounts. Once we are done with these transfers, we are ready to prepare the income statement. We're ready to prepare the statement of retained earnings, the balance sheet, and to close the accounts. So again, this is a comprehensive problem that I really like because it includes every single thing that we have done in the first 4 chapters of the book. Okay, so I will show you how to prepare. We're going to the next page. I'll show you how to prepare the income statement first. And I want you guys to remember that the income statement first for the blank. Okay, the income statement is the first financial statement that the company prepares. This is one of the financial statements that you'll be responsible for. So just for your notes, the income statement reports performance for a given period. The way we measure performance is by how profitable the company is, and profit or net income is calculated by subtracting expenses from revenues. If expenses are less than revenues, the company is profitable. Net income is a positive number. If revenues are less than expenses, then the company is operating in a net loss position. So when you're preparing an income statement, if I ask you to do that on the exam, you have to show the name of the company first, H&H Tool Incorporated. In this case, this is the income statement for the period. So in this case, for the year ended 12/31/2018. It is for a period. In contrast, the balance sheet is prepared as of a point in time. So remember, on the income statement, we start with revenues. This company is a service company, so it has service revenue. And then we list the expenses. This company has salaries and wages expense. They have depreciation expense, amortization. All the expenses that we prepared journal entries for last time have to be listed here. We have income tax payable, interest expense, supplies expense. Where are those numbers coming from? They are coming from the adjusted trial balance that I just showed you, the one that we did right before the class period ended last time. So service revenue, if I'm going to go back and forth between the document that we worked on last time and the document that we're working now, so I don't have to rewrite anything, but service revenue, if you look at service, there's a question. Hold on just a second. Let's see if we can address that question before we proceed. Income tax expense, not income tax payable. Did I say payable? No, these are all expenses. Income tax payable is a liability. Income tax expense is the expense account that goes on the income statement. All right, so if I look at the trial balance that we prepared last time, I can see the amount of revenues that the company has. I can see the amount of revenues that the company has, 152, and then I'll just copy all the expenses in my income statement. So service revenue is 152. I have salaries and wage expense 94. 7 is depreciation expense. 4 is the amortization expense. Income tax expense is 9. Interest expense is 2, and supplies expense is 18. So we'll add all of these expenses and we'll report total expenses. So total expenses here are 134. All right. So remember the equation for the income statement. We have revenues minus expenses equal net income. So here is my revenues, here's my expenses. So net income must be the difference between 152 and 134. Net income in this case is 18. This is a very important number. There is a reason why we prepare the income statement first. And it is because we need net income for the next financial statement. So before we move on to the next financial statement, which happens to be the statement of retained earnings, again, let me make sure this is solidified. The income statement, look at the note that I made up here. The income statement shows performance for the given period, and the way we measure that performance is net income equals revenues minus expenses. So if expenses are higher than revenues, the company is operating in a losing position. If revenues are higher than expenses, then net income is positive, and we call it a profit. So from here, this is the first statement that the company prepares. And this format, revenues minus expenses, is telling us that this is a simple income statement. Later in the semester, we'll get familiar with a different format. We call it the multiple step income statement, but for now, that's all you need to know. So just like we studied in chapters 1 and 2, when the income statement is prepared and we determine that the company is profitable, so in this case, net income equals profit, because revenues of 152 are higher than expenses of 134 by 18, we need to decide, or the company rather needs to decide, what would they do with the $18? So they can either keep it for future growth, expansion, internal purposes, or they can pay it out in dividends. Or they can do a combination of the two. They can keep a little bit and they can pay out some of it, whatever the company's management and board of directors decide. So once that decision is made, the next financial statement is prepared. So again, you need to specify the name of the company, H&H Tool Incorporated. Statement of retained earnings is for the year ended, in this case 12/31/18. So the statement of retained earnings, you need to know how to prepare the second statement in the company's financial statements. The statement of retained earnings shows the change to retained earnings during that period. You'll see a beginning balance for retained earnings. To that beginning balance, we'll add net income and subtract dividends. So beginning balance plus net income minus dividends would give us the ending balance in retained earnings. This line item here, net income, comes from the income statement that we prepared on the previous page. Remember, the company can keep some of it, or they can pay some of it in dividends, or they can pay all of the profit in dividends. In this case, though, we don't have any dividends, so the company has chosen to retain all 18 of the net income that they realized for the year ended 12/31/18. Now we need to find out what the beginning balance in retained earnings is. For that, we're going to go to the trial balance that we prepared last time, and here is the retained earnings of 8. So we have beginning balance in retained earnings 8. To that, we're adding net income of 18. 0 dividends are subtracted, so the ending balance in retained earnings will be 26. This right here, the ending balance in retained earnings, will be reported on the next financial statement on the next page, and the next financial statement on the next page is the balance sheet. So the balance sheet is the last financial statement you guys are going to be responsible for. So let's go down and make a balance sheet. So here is the form for the balance sheet. Of course, you're doing this exam on Connect, so the form will be provided to you, but you will still have to input the name of the company, H&H Tool, as of 12/31/18, Remember, the balance sheet reports financial position. So the balance sheet reports financial position as of a point in time. So the balance sheet is a snapshot, literally a picture of everything that the company owns. We call those resources assets. And everything that the company owes, we call that liabilities and stockholders' equity. The two sides of the balance sheet have to match. Once we total up all the assets, they have to equal the total liabilities plus stockholders' equity. So let's go ahead and make the balance sheet. From chapter 1 and chapter 2, you remember that we need to list the current assets first. And current assets in this case are cash, accounts receivable, supplies. I think that's about it. Cash, accounts receivable, supplies. Current assets are ordered or listed in the order of liquidity. And liquidity means how quickly we can turn them into cash. So again, I'm going to go back to the adjusted trial balance and take the balances from there. So we have 66 for cash, 21 accounts receivable, and 11 for supplies. So the total current assets is the sum of the three, or 98. Once I'm done with the current assets, I'll be listing long-term assets starting with land. In this case, the company has land of 7, equipment of 60, less accumulated depreciation of 13, software of 27, less accumulated amortization of 9. So once I list all of my assets, I have to total them. So I have $98 in current assets plus 7 plus 60 minus 13. Note that I am subtracting the contra asset accounts. So minus, what was it? 98 plus 7 plus 60 minus 13 plus 27 minus 9. I'm ready now to total up all the assets and provide a total asset number of 170. This is my final answer here. On the liabilities and stockholders' equity side, just like I started with current assets on the asset side, I have to list current liabilities first. And current liabilities here are accounts payable, notes payable short-term, salaries and wages payable, interest payable, income tax payable. So the word payable tells me it's a liability. So accounts payable are 8, notes payable 13, salaries and wages payable 13, interest payable 2, income tax payable 9. So not only these are my total current liabilities here, but they're my total liabilities because I don't have any long-term liabilities. So when I total them up, 8 plus 13, 13, 2, and 9, I have $45 in liabilities. Then I have to list stockholders' equity, which is comprised of common stock of 99. And now I have to go back to my statement of retained earnings on the previous page and transfer that amount 26. See, this amount 26 comes from the statement of retained earnings on the previous page. Now when I total liabilities plus common stock plus retained earnings, I should get the same number, 170. So very, very important for total assets to balance and to be equal liabilities plus stockholders' equity. Remember the basic accounting equation? I will ask you to calculate things using the basic accounting equation. And here is the breakdown. 170 should equal total liabilities of 45 plus stockholders' equity, which is made of 99 common stock and 26 retained earnings. All right, so once the financial statements are prepared, you guys are not going to be responsible for the preparation of a statement of cash flows. Once the financial statements are prepared, we need to close the accounts. So before we make a post-closing trial balance, we need to prepare closing entries. So closing entries are covered in chapter 3. You're already familiar with closing entries. So let's find the accounts that we need to close. So right here, I'm going to give you a few notes. We only close revenues, expenses, and dividends. The reason why we close those accounts is to transfer their balances to retained earnings. So revenues, expenses, and dividends are called temporary accounts. They're closed temporary accounts because at the end of the period, we need to zero them out, close them, and get them ready for the next period. So now our next step would be to figure out, to find those accounts. Again, we don't have dividends here, but we do have revenues and expenses. So remember, revenues, expenses, and dividends are called temporary accounts. They need to be zeroed out. Everything else stays open. All the balance sheet accounts stay open. We call those permanent accounts. So I'm going to scroll way up to where our journal entries were, and I will prepare some right here. I will prepare some closing entries. So when we close service revenue, we need to debit that account. Service revenue is debited, 152. Salaries and wage expense, and all other expenses, depreciation expense, amortization expense, income tax expense, interest expense, and supplies expense. All of the expense accounts have to be credited. So I'm going to start with 152 and then list on the credit side the expense balances 94,749.2 and 11. I believe it was 11. So, oh, I'm sorry, and 18. This is the supplies expense, 18. So look at the debits and credits. If I try to balance this journal entry, I have debits of 152 and credits of 134. My debits and credits do not balance. I have to credit the $18 to retained earnings. I am moving the balance from service revenue and all the expense accounts into retained earnings. So what am I moving to retained earnings? The net income. So this is the closing entry for this problem. Once the closing entries are prepared, we need to put together the post-closing trial balance. So the post-closing trial balance, again, will look at every single account, debit and credit. Every single account's debit and credits will remain the same except for service revenue and expenses. Those balances will be zero. Let me look at the questions. Do we have any questions? So Dave is asking, will retained earnings always be credited when closing? That's actually a very good question, Dave. Retained earnings will be credited when closing if the company is profitable. Does that make sense? But if the company is losing money, if their expenses are more than revenues, then retained earnings will debit it. Does that help? Okay, so yes, if revenues are higher than expenses, it will be credited. If expenses are higher than revenues, it would be debited. So even though, so let me show you something real quick. I'm going to go to my whiteboard. Just a second. Where's my whiteboard? To show you this. So here's the retained earnings account, right? It's a stockholders equity account. It increases on the credit side. It decreases on the debit side. The beginning balance is expected to be here, right? Revenues increase retained earnings, dividends and expenses decrease it. So the normal balance is always on the credit side. We want this to be the case. However, if expenses are higher than revenues and the company is in a losing position, then we might have a retained earnings account with a debit balance. All right. A couple of other things. Let me just finish this real quick. So my last thing here to do is I need to prepare the post-closing balance. Just a few minutes ago, I said that most of the balances will be the same. So cash will be 66. Account receivable will be 21. So it will look like the adjusted trial balance. So again, this is the H&H company, right? This is at 12/31/18. So cash will be the same. These are the permanent accounts. The permanent accounts will not change at all. The temporary accounts, though, will be zeroed out. Oh, thank you for reminding me, Juliana. I'm still on the whiteboard. Okay. Let me switch back to my screen. So now you should be able to see what I'm writing. All right, so here is the post-closing trial balance. This is the last step in the accounting cycle, in the accounting process. Like I said, all of those permanent accounts will have the same balances like before. And I'm not going to write all of them. I'll post the solutions to this problem on Blackboard shortly. I just wanted to show you that all of this will be the same like the adjusted balance, but then when we get to revenues and all the expenses, we should see zero balances because we just closed the accounts. And that was the whole point of closing the accounts, to zero them out and to prepare those accounts for the next period. A couple of ratios, just to remind you, we are familiar with the current asset divided by current liabilities, or the current ratio. And we're familiar with the net profit margin, which is net income divided by revenues. The current ratio is a balance sheet ratio. This here is an income statement ratio. You need to be able to work with both. All right, so let me open up the floor for discussion. Do you guys have any questions at all? Again, this will be posted on Blackboard as soon as this session is over. If you don't have questions on the comprehensive problem, again, this comprehensive problem goes over every single thing that we've learned in chapters 1 through 3. If you don't have any questions on the comprehensive problem, okay, so there is a question. Could you scroll to the top? Okay, hold on. I am going to show you that again. So once I do that, if you guys don't have any other questions, we will look at the document that I prepared for your exam review. So let me know when you're finished with your notes so we can move on. All right. Okay, so I'll go back to the balance sheet, Janelle, but I'm also posting this. Here's the balance sheet right here. This is pretty much the whole thing. And this is, I don't know how far or up, how far you want me to go, but this is the balance sheet itself. All right, so the next few minutes, we'll discuss your first exam. So I made an announcement on Blackboard yesterday. Your exam will open Friday at 8 o'clock in the morning. I'm giving you 2 attempts to finish the exam. First attempt, actually both attempts are 120 minutes, which is plenty of time to go through the exam several times. Once you start the exam, you're not going to be able to save your work and exit. Hey, Janelle, I'm pretty sure everybody else can see the document that I'm sharing, so I'll just post it on Blackboard and you'll get it from there. So the second attempt of the exam will be only the questions you missed from the first attempt. So it will be the same questions. You'll be able you'll be given another chance to work on the questions you missed. But again, as I was saying earlier, you're not going to be able to save your work, exit, and go back in the exam. Does that make sense? So I'm giving you 2 attempts, 1 hour and 20 minutes each, but you have to find a quiet spot, reliable internet. Your computer has to work well, because once you start, you're not going to be able to stop. The questions are a combination of multiple choice and workout problems. So that's what I was going to show you next. So again, I'm giving you Friday, Saturday, Sunday, the whole weekend, because I know that we are slightly less busy on the weekend, and I know life happens, so I wanted you to have ample time to complete. Do you have any questions on the format of the exam? If you don't, I'll show you my review document. It will be proctored, yes. All right, so let's go. I'm going to share my screen again. Let's go back to Blackboard. Lessons. Right under chapter 3, I've added an exam 1 review. So we'll look at exam 1 review document. The second document here are the solutions to the problems I'm about to show you. So here's the exam review for you. So I'm going to discuss this for a few minutes, and then I've given you a bunch of sample questions that you can work. So for the first exam, you need to know the 4 basic financial statements. You need to know what the balance sheet is. So the purpose, the structure, the elements, which is basically what we just went over. The balance sheet reports financial position. It shows assets, liabilities, and stockholders' equity. The basic accounting equation is important here, and the order. You are responsible for the different types of balance sheet accounts. You need to be able to tell me if I say account receivable is what type of account, immediately you should be able to tell me that this is an asset account, more specifically a current asset account. You should be able to do that with liabilities, equity accounts, and you should be able to identify and classify all of the accounts as current and non-current. So in chapter 1 and 2, we learned what causes changes to the balance sheet. We call those changes business transactions, and we spend quite a bit of time analyzing transactions and showing the effect of those transactions on the balance sheet. You need to be able to make journal entries, just like we did in the comprehensive problem and all the problems that we've worked in class in the homework. You need to be able to work with key accounts. One of my favorite questions is to ask you guys about normal balances. So Dave's question about retained earnings, which has a normal balance on the credit side, was very important because I can say, hey guys, here's a multiple choice question for you. This account, retained earnings, has a debit balance. Is that normal? No, it's not normal, but is it possible? Yes, it is. And we discussed how. So you need to be able to prepare journal entries. You need to be able to prepare a trial balance, just like I showed you in the comprehensive problem. And you need to be able to prepare a classified balance sheet in proper form, which is basically what we did in the comprehensive problem and all of your homework problems. The current ratio is current assets over current liabilities. This is something that you need to be able to calculate as well. So in addition to the balance sheet, you need to be familiar with the income statement, just like we did a few minutes ago. Prepare it. Simple income statement where you subtract expenses from revenues. You need to know what the purpose, structure, elements, and the order of the income statement are. You need to be able to tell me what is earned revenue. When are we allowed to show revenue on the income statement? What is an expense? This is from chapter 3 mostly, really. So that's where we got familiar with the accrual basis of accounting and the revenue recognition and the expense recognition principle. In chapter 3, we also learn how to prepare adjustments. So you need to understand the accrual basis of accounting to be able to prepare adjustments. You need to be able to tell me what type of adjustments exist, so accruals and deferrals. And you need to be able to describe the adjusting process, just like we did in the comprehensive problem. You need to be able to prepare a statement of retained earnings and tell me how that affects the stockholders' equity. So basically, this is the material that we covered in chapters 1 through 3. The rest of this document are sample problems. So you need to be able to answer a few multiple choice questions on the exam. And I've given you plenty of examples in the individual lesson folders. There is more multiple choice questions for you to practice. So here's that. And then you need to be able to prepare journal entries. I'm going to ask you to prepare monthly or annual journal entries. At least one of your workout problems will focus on adjustments. So these are just practice problems. closing entries, just like we did a few minutes ago. You need to be able to close the temporary accounts. This is part of chapter 3. And as always, you need to be able to classify accounts. So if I give you a matching problem like this, you need to tell me real quick, is common stock an asset, liability, stockholders' equity, or is it not separately presented on the balance sheet? So these are just some examples. These are just assorted problems, a few more multiple choice questions. You should be able to answer all of those questions on the exam, or all of these different types of questions. So that being said, I'm giving you plenty of time to take the 2 attempts. I'm allowing you to use your notes for the exam. You also have the book at your disposal. So this is more like a take-home exam than anything else. There is no reason for you not to do well on the exam. So the other thing that I was going to show you is, because we're not going to be working these problems in class, the solutions are in the exam 1 review folder as well. So now I'm going to stop talking and let you talk, and you let me know what are you doing. Yes, there's a key for these, Janelle. The key, I just show you where it's at. Yes, you can use scratch paper on the exam. Absolutely you can. And then you're allowed to use a calculator. So remember, this is accounting. If you don't have scratch paper and a calculator, you won't be able to do the problems. Do you guys have any other questions? Well, if you don't, this is it for this week. Good luck. Remember to submit the exam on Sunday. Yes, Sydney, you're allowed to use your materials. Any other questions? So there's a question, are the journal entries like the homework with drop boxes? It could be either, Eli. So you need to know the accounts. All right, no problem. All right, guys. Like I said, good luck on Sunday. Have a good weekend. And thank you for joining me here. I know you guys will do great.